Hello and welcome. I'm Adam Camillo from Associate Global Partners, and today I've got the pleasure of speaking with Andrew Torrington, the Chief Investment Officer and Managing Director of Woodbridge Capital. What are the different type of loans used in a private credit portfolio?
It's I think a challenge for private credit to explain to investors the difference between first and second mortgage, because from a risk and return profile, they really are night and day. So first mortgage is our fund, first mortgage is where we play, and what that means is we sit first on the capital stack. And what that means is that we have absolute mortgage over the property, and that if any time we need to step in on the asset and sell the asset to get investor money back, that we get our money back first. That's very important to us in terms of the Woodbridge Fund, because we're a capital preservation fund. Capital preservation is at our heart, so because of that we only do first mortgages. There's nothing wrong with a second mortgage fund or a mezzanine mortgage fund, but the risk profile is very different to a first mortgage profile, and the return should be consummately different from a first and second mortgage fund. So that's why we're playing first.
How do you assess risk and return when looking at a project?
So risk is obviously a pretty broad spectrum, but one of the key things we use is valuation for our assets. So part of our mandate is that we must get a first mortgage valuation on all of our loans. So the loan book is 100% valued by a tier one valuer. For the valuation is for lender reliance, which is important. The valuation is no longer than 90 days old, which is important. So as a starting point, we get an independent valuation of our assets. Doesn't mean it's right, but it's the starting point. What we then do is put a 10 to 40% stress across that valuation and prove to ourselves that on different circumstances that asset can bear a 10 to 40% decline and our capital won't be at risk. And then we look at more broader things like comps in the market, what's the square metre rate per land, per apartment, per office, the amenities around the assets. So valuation's at its heart, but it's a combination of many things around.
What does ESG mean to you?
So ESG to us is about ESG and responsible lending. They're blended together to us. So we look at it, it's ingrained in our investment process. It doesn't affect our returns, I should say up front. There's a bit of a negative connotation around ESG investing. What it does is that every loan we look at, we must put through a negative screen, and that takes out certain types of loans in certain low socioeconomic areas or certain industries. I think it's what investors want, and I think North American, European investors are very much used to ESG practices. I think it's new to Australian investors, particularly wholesale, but we very much believe it should be part of every private credit strategy. I get it's new in our industry, but we believe it, we capture it, we test it, we report on ESG, and I think the industry will catch up and they'll appreciate that it's a point of differentiation when you're investing in these type of funds, that you've got a responsible investment overlay to them.
What makes the Woodbridge Private Credit Fund different?
Andrew, because our industry is growing really fast and there's a lot of private credit providers coming into the market, and of course, we would say that we've got great systems, we've got great people, we're asset class specialists, we understand our risk, yada, 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 and I get that, and we certainly do say that. But I think for us, there's probably three main things that make us different. Transparency is that we are genuinely, very transparent with our investors about what loans are in our loan book, what our systems, processes, controls, DD systems are, and I think that makes us unique. Construction expertise, I've been working for construction companies over half of my career. As a firm, we really do understand construction risk, and that just means that we can identify construction risk, we can price it correctly, and we can manage it whenever it pops up. And I think the third thing for us is ESG. We're attempting to bring full transparency on ESG to private credit. We think ESG is important for investors. We understand Australia's a little bit behind our counterparts in the US, Europe on ESG, but we think investors here increasingly want to see investment managers with ESG policies, responsible lending practices, and transparency around how they are selecting their loans.
Thank you for your time, Andrew. To find out more about Woodbridge Capital or the fund's benefit and risks, we encourage you to visit woodbridgeprivatecredit.com to find out more. If you have any questions, please feel free to contact us on 1300 052 054 or emailing at invest@associateglobal.com. Thank you.